Focus on Headline. And let's take a look at what major issues are making the headlines here on Focus on Headline. For this, joining us in the studio, we have our reporters, Kwon Soo-hwan and Son Bo-kyung. Guys, welcome back.
Good evening.
All right, so let's start things off with some economy-related news here. The Kospi tumbling below the 2,400 mark for the first time in 19 months, as we've been talking about in our program last year. I mean, a lot of our traders have enjoyed a nice, few year or so of a pretty bullish stock market, but we're going on the opposite end here. Bo-kyung, start us off with the latest on the stock markets.
Right. So on Friday morning, Kospi opened 1.7% lower from its previous closing of 2,409.72, but fell to 2,396.47 at one point in early morning trade. At 9:35 a.m. today, the index marked 2,411.23, which is 1.64% lower than the previous day. This marked the first time the index fell below the 2,400-point threshold since November 5th, 2020. Such drop was backed by foreign investors selling a net of 167.8 billion Korean won, while institutions and retail investors each bought a net 148.8 billion won and 11.81 billion won, respectively, defending further drop of the index. So to briefly mention what happened on Wednesday, the Federal Reserve raised its key interest rate by 0.75 of a point and signaled that more rate hikes were coming to fight inflation. And shares in New York rallied after the Fed's giant step, which is the biggest since 1994, as investors were somewhat relieved from the Fed's chair Jerome Powell's comments that implied that future rate increases may be more modest. So according to an analyst of a securities company, tumbling global market shares, including the U.S. market, will play as a burden to the South Korean market, as it is a highly export-driven one. And we will have to see later in the day how the market will close today. And actually, I have the most recent update, which is that the market was closed with 2,440.93 as of the Kospi index. And among the major South Korean companies, Samsung Electronics lost 1.81%, marking its share price to be 59,000 Korean won, and the number 2 chip maker SK Hynix also sank 1.64%. There were also other companies that have lost their share prices, such as LG Chemical losing around 3%, Naver losing 0.63%, Hyundai Motor losing 2.31%, and so on. And for Samsung Electronics, Naver, and Kakao, the stock prices hit the 52-week record low. And by sectors, the clothes and textile sector lost 1.36%, chemical around 1.62%, and so on. So the secondary tech-heavy Kosdaq also fell below the 790-point threshold in 20 months, standing at 783.85%, which is 2.28% lower than the previous day. In the Kosdaq market, institutions and foreign investors were selling 35.7 billion Korean won and 2.3 billion won respectively. Retail investors bought 46.9 billion Korean won.
Yeah, it's pretty rough right now in the stock markets. Seeing Samsung Electronics under 60,000 won per share. At one point, I mean, it surpassed 90,000, and everyone was going to say that it was going to hit 100,000 Korean won. It's been going downward since then, but it's what the market is, right? Inflation's high, key interest rates high as well. You have the perfect storm for a pretty bullish stock market. But on to the overseas stock markets too. So the U.S. and European stock markets also plummeting day after the historic rate hike by the Federal Reserve. So fill us in on that.
Right. Out of fear of recession, U.S. stocks tumbled significantly on Thursday. The Dow Jones Industrial Average plunged to below the 30,000 level for the first time since January 2021, dropping by more than 740 points or by 2.4% to 29,927. The S&P 500 index fell more than 3%. The tech-heavy Nasdaq slightly over 4%. Market markets had initially rallied on Wednesday following the Fed's announcement it would hike its key interest rate by 75 basis points to curb inflation, but the figures were reversed as investors feared the aggressive monetary policy could potentially result in a recession. Analysts say Thursday's sell-off is a rational response to the policy decision on the back of accelerated pace of tightening, weaker growth, and continuous high inflation. Stocks in Europe also went down significantly on Thursday, with the pan-European stock 600 closing by 2.5%. Key indices in the UK, Germany, and France also were reduced by 2 to around 3%. Now, this comes as the Swiss National Bank had a surprise interest rate increase by 25 basis points, and that happened for the first time in 15 years, also to quell inflation surge. This Friday, however, European stocks inched higher, with the stock 600 index gaining 0.8% in early trade, but European markets remained on course for a weekly decline due to the tightenings from major central banks.
Yeah, you know what was really unusual is the fact that the day that the U.S. Fed decided to raise it 75 basis points, the stock markets actually soared, right? And then it's the following day that it started tanking once again. And so why we're seeing that, I'm not too sure, to be honest with you. But another thing that we've been watching very closely here in country, it could be both good and bad, to be honest with you. There's some pros and cons of this, but the $1 exchange rate, this has now exceeded the 1,290 Korean won mark. We are inching closer and closer to that 1,300 mark. Boogie, let's get the details of this.
Sure. So on Friday, the $1 exchange rate stood at 12,090.9 Korean won, which is 5.3 won higher than the previous day. South Korea's local currency opened on Friday at 1,288 Korean won, which is 2.4 won higher than the previous day's closing, breaking through 12,090 won. As I mentioned earlier, global stock markets saw plummeting share prices as the relief rally following the Federal Reserve's hiking key interest rate was short-lived. And since the Fed has raised the key interest rate, it was not only the Fed, but also the Bank of England, the Swiss National Bank, and other major banks from the European countries also taking part as well. And this shows that the countries are following suit due to concerns of facing economic recessions and undergoing a global liquidity crisis. And as European countries continue to adopt tight fiscal policies, the dollar index also fell overnight. However, a weaker won is putting more pressure on the Korean economy. As recession fear grips the U.S. economy, the weaker won is playing as a vulnerable point for the Korean economy that is highly dependent on export to the U.S. market. The previous day, a Chinese official also said that China will avoid from heavily stimulating its economy, so halving the interest to invest in the Asian region. However, there are also possibilities that export companies could sell a substantial amount of dollars that it already possesses, and that Seoul's Foreign Exchange Authority will also try harder to defend the exchange rate from increasing to more than the current 12,091 level. And according to the latest update, today's exchange rate was 12,087.3 in the end of the day.
You know, what's interesting is, again, I mean, if you have, if South Korea has a high number of imports coming in, they're technically paying more than they should, which is why the high dollar to Korean won is negative. But if you have exports, right, when you're selling things, and that's the dollars coming in as well, so that's the positive. But the only thing there's a lot of pros and cons of this, the rising exchange rate at this time. Normally, when you have a high dollar-won exchange rate, meaning that the greenback is stronger against the Korean won, there's a lot of inflow of foreign investors into the Korean stock markets. But unfortunately, right now, the stock market's so bearish that no one is willing to invest. So none of that money is coming in as well. Another thing that we've been looking at, domestic oil prices. These also hitting record highs. So you have the details of this.
Right. Starting with the price of diesel here in the country, which has hit above 2,100 won this Friday as of around 9 a.m. in the morning. According to OPNet, an oil price information service website, average diesel prices at nationwide gas stations reached 2,100.73 won per liter, up 4.63 won from the day before. Average gasoline prices got up to 2,095.83 won per liter, and that's also up by 3.63 won from the previous day. Actually, on my way here, the gas station when we go out of
Near the art center?
station. Yeah. There, I saw the average, not the average, but the price there at the station for both gasoline and diesel were at above 2,161. And so these are these are record highs here. Nationwide gasoline price reached an all-time high of 2,064.591 per liter on June 11th, and that record was already breaking the record of 2,062.551 on April in 2012. And diesel has also been skyrocketing. Its previous record was at 1,947.741 per liter, and that was also some time ago. And these high prices are continuing on the back of tight supply of petrochemical products because of the war in Ukraine, as well as supply chain disruptions.
I mean, that's the thing, right? I know environmentally diesel cars are bad, but the main reason why I bought a diesel car was because diesel prices were so much cheaper than gasoline. Now I'm basically paying, same price as gasoline. But it's interesting you mentioned that particular gas station. I used to go there all the time because that was one of the cheapest gas stations.
It was?
Yeah, even despite the fact that it's Gangnam, right? It's supposed to be really expensive, but it's actually cheaper than even anywhere in my neighborhood. It's different now. And the prices that you were giving out, it's average, which means that there are prices that are so much higher in other parts of the country, which is really, really concerning. A lot of people, of course, now opting to take the public transportation because of these high oil prices. We had the Finance Ministry release their Green Book for the month of May. What we're looking at is a gloomy economics diagnosis, fears of economic recession. Bo-kyung, fill us in on this.
Yeah, so I think we're just always talking about these negative trends taking place in the global economy, and now it's also glooming over the Korean economy as well. So according to the Green Book that was issued in June this month by South Korea's Finance Ministry, the government expressed concerns for economic recession as commodity price continues to increase with slower investment, as SJ just mentioned. There is not much investment going on here, and slow export as a result of global external factors such as the war in Ukraine. And it's the first time this year that the government used the expression economic recession in the Green Book. This shows that the government is not only worried about slower export and investment, but in general that there are possibilities of an overall economic recession. In fact, indices show that export and investment is slowing down. Export increased 21.3% last month in general, but daily export increased only 10.7%, which is much lower than April. And facilities investment dropped 7.5% in April than the previous month, showing a downward trend for 3 consecutive months. Indices that show the current economy fell for 2 consecutive months, and indices that predict the future economy also fell for 10 consecutive months, implying that the economy has already entered a so-called recessionary phase. Major institutions such as the OECD and the IMF also downward adjusted the global economic growth rate as well. Considering the fluctuating global economy, the South Korean government announced the economic policy direction of the new government and adjusted South Korea's 2022 growth rate to 3.1% from the previous 2.6%. Last month, the consumer price index rose 5.4% in May, which is the highest in 13 years and 9 months. However, there was also some positive news as 935,000 more people were hired last month compared to the previous year, marking the highest increase since 2000. The South Korean government also said that it will transition to an emergency response system to stabilize prices and manage the macroeconomy as well as any associated risks.
Yeah, I mean, obviously seeing the employment figures go up is good, but we call it the base effect, right? Things were so bad last year because of all the COVID-19 restrictions and so many people having lost their jobs. Now that we have these COVID-19 restrictions lifted, we are going to see more people finding jobs as well. But I mean, recession, right? I mean, this is a term that spooks everybody, not just economists, but just everyday people like us. And I mean, just comparing it to like the 2008-2009 recession that Asia faced and even in the United States, it's kind of different. I feel like it's hitting a lot of us harder this time around, especially with everything that's going on right now. And there's no, I guess, way to find out how much longer this is going to last, right? So many things happening, all these external uncertainties that we talk about, like the Ukraine crisis. For sure, we would love to see that end as a first step towards kind of our economic recovery here. Moving on to some other issues here. President Yoon Suk Yeol asking for a stern response to North Korea's provocations during a phone conversation with U.N. Secretary-General António Guterres. So let's get the details of that.
Sure. So South Korea's president held his first talk with the chief of the United Nations this morning, according to the presidential office. President Yoon Suk Yeol called on the UN Security Council to come up with resolute measures against North Korea's missile and nuclear provocations, stressing that Pyongyang's acts are a serious threat to peace and stability on the Korean peninsula as well as the international society. He warned in the case of the absence of a stern and united response from the UNSC, there is a possibility that this will give the false impression and message that North Korea's nuclear and missile development is acceptable. This remark may have been directed towards China and Russia, with both of these permanent Security Council member states last month having vetoed a proposal for additional sanctions against North Korea following its ICBM launch. Yoon also conveyed his concern regarding the COVID-19 spread in the north to the UN Secretary-General, that is, and said that he is closely monitoring the situation. He told Guterres that South Korea has expressed its will to support the north with medical supplies, which would include COVID-19 vaccines, but the north has yet remained silent towards such offers. And with that, Yoon asked for the UN to also watch over the virus situation in the north and communicate with Seoul continuously on the matter. The presidential office had no specific comments regarding what Guterres said during the talks, but said that the two were on common ground regarding North Korea's nuclear as well as COVID issue. Meanwhile, there were no discussions apparently made on the UN General Assembly in September this year, which President Yoon may attend. And that's pretty likely.
Yeah, exactly. Of course, the topic of North Korea seems to be everywhere right now because National Security Advisor Jake Sullivan also extended his worries to China about possible nuclear testing of North Korea. So, Pong-yang, you have more on that.
Right. So National Security Advisor Jake Sullivan expressed his worries to China about possible nuclear testing of North Korea. In a session at CNAS, which is an American think tank, Sullivan talked about his meeting with Yang Jie-tzu, who is the head of the Chinese Community Party's Foreign Affairs Bureau. Sullivan said that he expressed to China the U.S. concerns over a possible nuclear testing of North Korea and that the, quote, proof will be in the pudding, meaning that the situation is yet to be unfolded. A U.S. official also said that Sullivan expressed his concerns over China having vetoed imposing any sanctions on North Korea in the UN Security Council meeting.